Look at that, folks. The markets are not looking good right now after we got the beginning of Jerome Powell's testimony, which goes into tomorrow. If you guys didn't know, you can see it's currently about 12:45 p.m. on the East Coast. We have the Russell down 0.5%, the Nasdaq's down 0.4%, the S&P and the Dow are each down about 1%, as we have the VIX up 1.8%, and we have, get ready for this, gold down over 1.7% and silver down 4%. Unbelievable. So we're going to break down the markets very quickly in this video, talk a little bit about Powell and what else to expect for this week, which we do have a lot more to expect for this week, guys. So if you all find value, hit the like button, make sure to subscribe, and let's get into it. So you can see once Powell started his testimony, the markets completely started to collapse. You can see here that was at about 10 a.m. on the East Coast. SPY was at 404.50 at that time, and once it started, this thing dropped down to 400. It got down all the way to 399.78. You all can see that right here. Then it got down to about 399. Then we saw a bit of a relief rally, as you guys can see here, from about 399 roughly to 402, and now we're starting to dump back again down towards 400, the low 400s. Maybe it goes back under 400, guys. So overall, there's been a lot of volatility throughout the past couple of hours, not only on SPY, but also on Triple Q. You guys can see here, Triple Q was at roughly 300, 301 roughly pre-market, and then once 10 a.m. kicked in, once Powell's testimony started, we got the drop down to 296. That was a drop of 1.3%. Now we're starting to see a bit of a relief rally, but nothing really worth writing home about, as this is still clearly in a downtrend, at least looking back over the past 1-2 days, right? You guys see that. So essentially why the market is falling right now is because Powell, maybe he might have came off a little bit too hawkish, right, in terms of them looking to raise, the Fed looking to raise rates a little bit more aggressively, right? He said, quote, "The latest economic data came in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes," which right now I think the Fed funds rate is what, 4.5 to 4.75, roughly right in that ballpark. So by the looks of it, guys, it is likely to come up even more. And he also said, quote, and he said this many times, right, guys? "We will continue to make our decisions meeting by meeting. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy." And he's been saying this for quite some time. He's data dependent. He's going to, look at the data meeting by meeting and make the decision based on that. It makes sense considering there's a lot of data to look at, and the data's been all over the place as of late. So we can't just be like, yes, this is for sure what we're going to do. It all comes down to the data month by month, which we're going to be getting some data today. Well, not today, but tomorrow, later on this week, guys. So let's actually break that down very quickly. Let me actually shift over here to my Safari tab. Bear with me, guys. Hit that like button, by the way, if you're finding value. I appreciate you all, as always. So check it out. We do have a lot more to expect for this upcoming week, for the next upcoming days, rather, shall I say. We can see here today, again, we got the beginning of the testimony from Jerome Powell. You can see that right here, and you can see he does this, I believe, twice a year, right? The testimony usually comes in two parts. First, he reads a prepared statement, and then the committee will hold a Q&A session. As you guys clearly, you know that. You've seen, the Q&A sessions for yourselves, and you can see down here why traders care. As head of the central bank, which controls short-term interest rates, he has more influence over the nation's currency value than any other person. That is for sure, guys. That is 100% for sure. So we have that today, and it's going to get spicy tomorrow, because tomorrow we have the good old JOLTS job opening, which that comes out at 10 a.m. on the East Coast. You guys can see here, this is the number of job openings during the reported month, excluding the farming industry, and this is released every month about 35 days after the month ends. You guys can see that right here. And this is released monthly about 35 days after the month ends. And if you guys didn't know, this is released monthly about 35 days after the month ends. And if you guys don't even know what the JOLTS job openings even is, let's zoom in a little bit here and I'll show you guys. And mind you, this has been trending up. You all can see the job openings have been trending up according to investing.com here. We can see here JOLTS defines job openings as all positions that are open, not filled, on the last business day of the month. A job is quote unquote open only if it meets all three of the following conditions. Condition number one is a specific position exists and there is work available for that position. Number two, the job could start within 30 days whether or not the establishment finds a suitable candidate during that time. And number three, there is active recruiting for workers from outside the establishment location that has the opening. So these three criteria need to be met for the job to be considered quote unquote open. So going back over here to the calendar, to the Forex Factory calendar, which shows all the economic data that you need to know that's coming up, we can see the forecast, I believe, is 10.55 million. Let me double check that. Yeah, 10.55 million job openings, which is less than what we saw last month, roughly 11 million job openings. So that's going to be coming in less than last month. And overall, when workers have a lot of options, think about it, guys. When workers have a lot of job opportunities out there, this drives up wages, which in turn could drive up prices, which then drives up wages, then prices. You guys have heard of the price or the wage price spiral, right? This is something that we have to keep in mind when it comes to the JOLTS job openings for tomorrow. And then it gets even better, guys. And on Friday, we have the average hourly earnings month over month here for the United States, which is roughly 0.3% of an increase. And I think, or that's the forecast, and I think last month it was roughly the same 0.3%. And this goes to show the change in the price businesses pay for labor, excluding the farming industry. So that's at 8:30 a.m. tomorrow morning. We also get the non-farm employment change, which is looking to be roughly 224,000. This is the change in the number of employed people during the previous month, excluding the farming industry. Again, the change in the number of employed people during the previous month, excluding the farming industry. So 224,000 in the green, which last month it was roughly 517,000. You guys can see that. So decent drop there in non-farm employment change. And the big one that I'm looking at personally is the unemployment rate, which is still stubbornly low right now. It's roughly 3.4%, or that's the forecast. Last month, it was 3.4%. And you guys know with Powell, raising rates, he's trying to slow down the economy, right? He might not say it. I think one person was trying to make him say that historically the unemployment rate goes up whenever interest rates go up, and he's trying to get the unemployment rate to go up. I forget who was trying to get Powell to say that Powell's trying to get the unemployment rate to go up, but he wouldn't say it, obviously. But one thing that he's trying to do, whether he wants to say it or not, is get that unemployment rate to go up a little bit, because that's going to help his case in terms of bringing down inflation. And at this point, it's at 3.4%. Last month, the forecast is 3.4%. Let's see what it actually comes in at. It's going to be a big week, guys, for data this week. And going back over to the stock market, let me pull up these charts and show you all what's going on a little bit more in depth here. Stocks are not looking too good today. Again, we're down all across the board, not only in the S&P, Dow, NASDAQ, Russell, but the metals. My goodness, guys, the metals are getting slaughtered right now. And on the 20-day chart here on Triple Q, you guys can see, and we outlined this yesterday, so if you guys missed this, hit that subscribe button so you don't miss another video. We outlined this downwards channel that we were in yesterday, still in it, and it looks like we got rejected now at about 300, 302, right at the top of that channel. That is not the best sign here for the bulls. That's on Triple Q, and we also see the same thing on SPY. Look at this. SPY, you can see we have the head and shoulders. We failed to break out of 408. That's the top of the channel. Now we're starting to dump down to 400. This thing's down 0.9%. This does not look good for the bulls. This looks like it might test the lows from a couple days ago at 390. Maybe it even takes out those lows. So SPY, bears are gaining momentum, no doubt about it. Same thing with Triple Q, and we'll see how tomorrow's testimony goes. We'll see how the JOLTS look, the JOLTS, jobs, right, openings, and then we'll see unemployment rate, all that good stuff later on in the week. That's going to have a material impact, no doubt about it, on the stock market, at least in the short term. And then we'll see later on in the month how, Powell addresses everything when we have the next Fed meeting, CPI, all that good stuff. So if you all found value in the video and you're ready for this jam-packed month, hit that like button, make sure to subscribe. And if you haven't gotten up to 17 stocks yet for Moomoo, use that link down below or go to stocksurfs.com/Moomoo. Listen to this, guys. Once you open up an account, you get 1 free share right off the bat. And if you deposit at least $100, you get 4 more free shares of stock plus 2 shares of either ticker symbol AI or BBAI. So right off the bat, if you deposit at least $100, you're getting 7 stocks. And listen to this, if you deposit at least $1,000 on Moomoo, you get another 10 stocks. So yeah, free money, guys, free stocks, link down below. I appreciate you all as always if you use that link because it is an affiliate link and it does help out the channel. Feel free to check out the Patreon as well, link down below. And with that being said, I'll catch you guys later. Peace out.